Welcome back, guys. My name's Alon, and this is AcornProductions. It's actually a beautiful day here on the Gold Coast, but I'd like to apologize for being a little bit late posting this video. I actually got a little bit sick, but as promised, we have a bigger than normal video, and we've actually had a few changes go on. First of all, we've had a good few months. We're slowly growing. We're slowly really just trying to build a bit of consistency. This first year, I'm not too worried about getting too many followers. I actually just want to hit my goal of essentially 20 to 40%, which is our goal. We're currently on track, let's say, to get to 25%, but we want to see what we can do for the rest of the year. It's been so good. So far, so good. Let me quickly show you what it looks like. It's a little bit different from last week. So we've culled down the big positions, and you see we've got BND, so bonds as our top holding, Bitcoin, ETH. You can actually see we've toned down all these positions. So all of these should be 6, these should be 5, these are just changes, of course. So all of these are 5%, 3%, and we've got a few smaller ones as well. So as time goes on, what I'm trying to show you guys, the portfolio is going to be evolving, and sort of the capital allocation is going to become better over time. So you'll see a few of the changes that we've made, and to be honest with you guys, I'd love to see what you think as well. So if you think something could be done better or something could be done in a different way, I, at the end of the day, really want that feedback coming from you guys. So if you see something you think, maybe you think differently on, let me know what you think. So I'd like to start, firstly, as you guys know, my strategy is based on essentially 4 different components of the portfolio. So that's where I'd like to start, guys. If you didn't know, the first part of the portfolio is the reserves. So we've got 4 parts: the reserves, the chest, the left horn, and the right horn. Just quickly, they all work independently, and this month we've actually rebalanced them all. So what's happened is, we've had some success, let's say, in the horns. These are part of the portfolio that takes additional risk. And now we've recaptured all those profits, which were about 10%, and we've now spread them over to the rest of the portfolio and brought down those positions again. So in the reserves, we actually haven't changed anything this month. If you look at essentially what our reserves are made of, I wanted to show you guys some pie charts to really visualize it. So we got 30% of the portfolio in bonds. Now this is, remember, when I talk about 30%, we're talking about 20% of the portfolio here. So 1/5 of the portfolio is our reserves, and of that 20%, 30% of that is bonds. So that would equate to, as we saw before, guys, 6% of the portfolio, if that makes sense. So 30% of our reserves are bonds, and then 10% is actually corporate bonds, SPSB. This is just corporate bonds, guys. And then here we have metals. So these, if you guys didn't know, these are sort of like lending out your cash to companies. And this is lending out your cash to companies, governments, everything. This is the whole bond market. That one's very diversified, but this one's just to companies. So these will pay us money, let's say 4%, I think roughly 4% a year at the moment. And they don't really do much more than that. So they're quite safe in that regard. Now here we have silver and gold. So these are just metals. Now the reason we have them in here is the reason for our reserves. So these aren't really going to fluctuate in price. Actually, as stocks go down, bonds might actually go up, which is what we typically see. So this will protect us from, let's say, changes in interest rates and all of those things. And these supposedly, so silver and gold, IAU is just gold, guys. So let me just quickly show you. It's just a gold. So it's a way of buying gold, as sort of like an ETF with less fees. So this just exposes us to gold. So 15% gold, 15% silver, so 6% of our portfolio, essentially, total portfolio, of 30% of this 20% is essentially in metals. Now metals should go down in bad economic times. So the point of having this in our reserves is that when stocks go down, if that were ever to happen in our main portfolio, something else in our portfolio would be going up to counteract that and essentially lower the losses at a bad time. So the reserves are our insurance for that. Now BTC is an interesting one. I want more exposure to BTC in general without, you know, allocating too much of the portfolio. I couldn't think of where I wanted to put BTC, but essentially, guys, I think BTC is the best currency right now. It's a global currency. It's not backed by any government. Nobody's printing money. Nobody is manipulating it, sort of like how they do with other currencies. It's definitely beating inflation. It's not going anywhere. The only problem with it is it's volatile, which is the problem with putting it in the reserves. But outside for that, I truly believe that if the financial system were to crash or to go bad, BTC would skyrocket. So at the end of the day, it's fulfilling what I really wanted to do, to stabilize our portfolio. At the moment, I'd love to know if you guys think differently, but at the moment, I truly believe that, you know how the banks were cracking at the start of the year, and a few banks went down and people were losing faith in the traditional system. Bitcoin went up. So there's definitely some correlation now with not trusting the financial system and Bitcoin, because it is detached, it is decentralized, and nobody can take it off you if you're the only one with the keys. So it's got that very special element to it, which is why I keep a big part of it there. I definitely want exposure to that. I think that it's a good hold, even for you guys personally in your portfolios. Now, to summarize with the reserves, there wasn't really any change in the structure, so we've kept it the exact same. And it's the same as last month. Essentially, we took some Bitcoin profits. We really reduced that position. It was quite large, and then we added to all the other ones. Remember, we profited from the other parts of the portfolio, so they got a little bit bigger. Keep in mind, this is 20% of our portfolio now. Now the next one is the chest, guys. So this is essentially the bulk of our portfolio. 40% of our portfolio is the chest. Now, the point of the chest, guys, is just to be a dependable core. So the core structure of the portfolio, the main fighters, if we were in battle, we can rely on these guys for stability, consistency, and it does it through diversification. So if you have a look here, actually, this is actually most of it. So if we look up the top, our biggest holdings, these are huge. Like this is Warren Buffett's company. We got VU, Moat. I'm not going to go into them. I don't have the time. These are very, very big ETFs. So we're really, really diversifying here. And I'm trying to hit different industries. We're going to look over these in more detail and change this over the next year or 6 months, because I want to diversify, not say away from America, not too many eggs in one basket, get many different industries, and hopefully work with you guys on what's actually going to be best for all of us. But if we have a look, this is what it was before the rebalance. So I had a big part of it in VU, a big part of it in QQQ, a big part of it in Moat. These are, let me show you what these are, guys. So this is the S&P 500. So this is like the most generic, safe investment that anyone would tell you to make. Like, very, very safe over time. There is volatility, but look, this is, I'm assuming, from COVID, so this is like the worst you're going to get. A third of your investment disappeared. But look at that returns over time. So essentially, these are really safe stuff, guys. That's my point. So we got VU, QQQ, Moat, we got Hathaway's company here. We got Warren Buffett's company. So this was this was more than 50% of it, looking over here. And then we've just got SOX and VGT. This is the tech companies, Apple, Google. This is a semiconductor ETF. And then we had 4 different ARK ETFs that were really just a small 20% little chunk of it. So essentially, it's quite simple, guys. What's happened is we've taken essentially 2.5% of all of the big guys here, and we've given them to the ARK funds, because honestly, the ARK funds have been performing quite well. I want to show you briefly one of the ARK funds. It's essentially, they look like they're coming back, so let's just click one. If we just look at a bigger sort of chart here, if you just look, this is a max chart, I believe, yeah. So you look when they started, they were up here. People lost interest, and then you can see we sort of hit our low, I feel, and we're possibly like on the way back here. That's what it seems. So essentially, at least for the next 2-month period, because that's when we rebalance, guys, every 2 months. At least for that next 2-month period, I want more exposure to the ARK funds. So I've done that. But essentially not too much changes for the chest. So we've just reduced some of our largest holdings and diversified a bit to our smallest holdings, but a little bit of the weighting, but yeah, not too much change. I would like you guys to comment if you have any opinions on the structure of this and how we could make it better. So essentially, guys, our biggest winner from last month has been Coinbase. I mean, at one point, I didn't cash out exactly at the top. We're still in Coinbase, just to be clear. We want to be in Coinbase till the good news arrives. Honestly, the good news hasn't arrived yet. It's just been going up seemingly without good news, but we're still waiting for the good news to come out of maybe that partnership to happen with BlackRock or something with its ETFs, or besides the XRP news, there hasn't been anything particularly good. But this was almost 10% of our entire portfolio, guys, because it doubled in value. Remember, 33% of 20% was like 6%. It was over 10% of our portfolio at one moment. So essentially, the main thing that happened, I wanted to add another one. I think 3 options is not enough. With 6% of a portfolio, when you go 33%, you're catastrophic losses, so like losing half of it or something like that, that's like a 3% blow to the portfolio. I just want to lower that a little bit because the stuff in here are going to be quite risky. I want to see what it feels like with 4, because I don't want to pick too many options because I need to find good options. So every time you pick an option that's not as good as the previous option, you're minimizing your rewards, without going into too much detail. But I think 4 would be a sweet spot. I'm adding Google as well, just as a filler. These are Apple, Google, and Microsoft are just companies that I think are gonna, especially Google and Microsoft with the AI and stuff, and Apple always has something up their sleeve. These are just good companies I feel like to hold over the next 2 months. Now, Coinbase, I might be looking at selling if there's some sort of good news. That's sort of my thought process here. I want to sell the good news. At the moment, Coinbase also generically looks like it could be on the way up, but it also looks a bit worrying. Like possibly it might be too high. That's my only concern. Maybe it's just going to lose steam, stuff's not going to get approved, who knows. But I'm going to stick to our initial judgment. You see, this is the boom, it was over, hit 110. And now it's easing back off. What is it at 90 now? So the question is, does it keep going with this trend? Or is it on a downwards trend now? I think now it might keep going, it might go down, who really knows? A lot of people are saying it's overvalued, but we're still waiting for that good news. So we're going to stick to our original judgment. But honestly, guys, we're already winning with this one. There's nothing to cry about, absolutely at all. So nothing really much to say. I would really love some suggestions about anything you guys that would think would be a good short-term hold. With a short-term hold, I'm really looking for the 2 to 4 months of holding and sort of basing it on some sort of macro concept, some sort of macroeconomic thing that should unfold in those months. And yeah, some sort of logic to go around that. And I would love to explore any ideas you guys have. So the right horn, guys, is a little bit different from the left horn. The main difference is we're looking for results over a longer period of time. So let's say instead of 2 to 4 months, we'd be willing to wait anywhere from 6 months to a year and a half to see our results. But we're still looking for a beyond average results. So we're taking additional risk here. Now, as you can see, this is quite risky. This is what it was looking like before the rebalance. We've got ETH, Tesla, MicroStrategies. If you guys didn't know, MicroStrategies, essentially, it did really, really well. Just like Coinbase, it was, I think, our second best performer. So that was rebalanced. Now, we've done a similar thing as we've done with the left horn. All of these positions, I was just feeling like they were too big. We want a cap of 25% for any individual position. So Tesla, ETH, MicroStrategies, all of these have been culled down. And we've added 3 new positions, specifically Algo, Amazon, Estee Lauder's, I don't know how to pronounce that, a makeup company. But all of these things I'm seeing that long-term value in. I'm happy to comment them, maybe a little bit more in a further video where the video is not already going for too long. But that's some of the new positions that were added alongside with Google. We can quickly see them on a map here. You can see, this is a 1-year chart, by the way, guys. You can see Google and Amazon on a more upwards trajectory, and EL and Algo also seemingly on the way down. But if we do have a look at it later, if we do zoom out, guys, and we do look at the chart, these might actually, with Algo, I'm thinking it might have reached the bottom. Maybe it hasn't. That's why I've got a very small position in it. I want to start accumulating it, and I'm thinking that it's near the bottom, but it might not be. It is down like 95% from all-time highs. If you guys haven't used it, it is genuinely a great cryptocurrency. If you guys have noticed, the only cryptocurrencies I invest in are Bitcoin, ETH, and Algo. And I think that Bitcoin is 1st generation, ETH is 2nd generation, and Algo is 3rd generation of cryptocurrency. But that's, and best of each category, by the way. But that's just my views. I might expand on that more in a different video. But that's why also I have the biggest allocation in Bitcoin through MicroStrategies as well. Keep in mind, then a smaller one in ETH and a very small one in Algo. So I'm trying to also match my belief with what we're investing in here. But I'd love to see what you guys think. I'm sure when it comes to crypto, everyone's got different opinions. But those were the ones I came to. But I think EL and Algo, if you give them that 6 months to 1.5 year sort of mark, I think we're genuinely going to see good results. And with Google and Amazon, Google's actually in that previous portfolio, but these are the new ads. With Amazon, I actually always liked that they did things over the longer term as a company, so they see results maybe a little bit slower than others. Now besides for that, guys, I wanted to say that we did the other thing we promised. I have added, I believe, a stop loss. Here we go. There we go. I've added a stop loss if you guys want to have a look. It's different depending where it is, what the asset is, but I've added a stop loss for everything. So as promised, we've added stop losses in. Now the goal long term, guys, is to build consistent profits and essentially reduce our risk as much as we can. So we've got this strategy, 4 different components, but the whole goal, guys, at the end of the day is to see if we can beat the market and to do it consistently over time, which is something that is incredibly hard. But I think with a little bit of help from community, with a little bit of banding together, with a little bit of, taking the spirit of this social investing, that if we do come together, that, maybe we are better than these expensive hedge funds, and maybe we can do good. And anyway, this is my personal growth and, in investing in finance. And if you guys didn't know, I do have a degree in economics and finance, and I'm testing a strategy, seeing what's going. And if you're here for the ride, thank you very much. I'll see you next time.